The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners have had a fun and exciting trading week so far. I know we talked about a lot of interesting developments on the last show, and there's a lot to keep you apprised of on those developments as the week has progressed. My name is Mark Longo, and I am your host for this fun-filled romp through the world of options. And I am joined by an intriguing cast of characters, starting off with the man in the rotating Options Express seat today, none other than Mr. T-Knob himself, Tim Navabi. Tim, how are you doing this fine Thursday afternoon and your second or third day, if my count is correct, as a Schwab employee?
Thank you very much, Mark. Appreciate it. I'm glad to be here as always, and I am glad to be a new Schwab employee. So, yeah, things are good.
And might I say, with this new setup, your sultry tones sound even sultrier than ever. I can hear all the ladies out there just swooning right now. I've never heard you come across so rich and real. Even when we did the live shows, you just seem even more real today. I don't know what it is.
Okay.
Talk to Tim.
And then, of course, the man from the mountains himself, Uncle Mike Tusaw from KnowYourOptionsInc.com. Check them out for your free 18-minute portfolio review. If it takes 19 minutes, they will charge you $10,000. So keep it under 18 minutes. Uncle Mike, how are you doing today?
First off, don't undersell our services ever again. It's at least $25,000 per minute.
I apologize.
So I'm doing great today, Mark. Excited to be here. And today is one of those markets to where if you fall asleep at your computer, then you need to check your pulse. It's an exciting day every day.
It is a good one. The yo-yo market is back, and we are on the rise once again. And then last, and only sometimes least, we are joined by the greasy meatball himself, Mark Sebastian from OptionPit.com, as well as Slinkies.com and many other ventures.
Yeah. You know, I'm sitting here working on trying to come up with a new name for the Express Block now that they're owned by Schwab. I've been thinking about the Schwab Street, Schwab's Thoughts, or
Schwabalicious. How about that? There we go.
Yeah. Schwabies, nothing with Schwabi. Or
Schwab the Deck.
Yeah. Or the Good Luck Chuck. The Good Luck Chuck Block. You know?
Talk to Chuck. There we go. We're going to talk to Chuck block.
The Talk to Chuck
That'll be the listener questions block now.
There you go. So can we start calling Tim Navabi Tim Chuck Navabi or Chuck Navabi? Is that what we call him?
Speaking of which, Tim, when are we getting Chuck on the show now?
I'm not sure yet. Not sure.
I love the way he responds as if he's like, but you know, it's gonna happen. I'll pick up the phone and call him right now. Give me a minute. The best.
I know you two go way back, so I thought I would leave that in your capable hands rather than having me call him again. After the fiasco of last time, I don't want to go down that rabbit hole with Chuck again.
Well, I don't know if you know this, but Tim Navabi, his password for all of his bank accounts and everything is Schwab because that's his mother's maiden name. So he's actually comes from a long list of Schwabs. So
you were the mole all along, Tim. It was you.
Yeah.
Uh-huh.
They planted you there years ago. This deal's been in the works for a long time.
Tim Navabi, his brother Thurston.
You can feel the love in this room, that's for sure.
Yeah.
And as always, with a little bit of nonsense, we will roll right into the trading block.
The trading block.
And welcome to the trading block. This is the section of the show where we discuss what's been catching our eye and what's been moving the markets today. As Uncle Mike alluded to in the previous segment, this was an interesting day. We're yo-yoing around yet again on the street, and this market's closed up. We had the S&P up 12 handles, NASDAQ up 38, the Dow up 84, and the good old VIX cash down to 18 even, down 1.17 points on the day. A lot of interesting things coming out. Obviously, some on the macro sense. We had some initial concerns over Portugal and the increasing unrest, or I guess you can call it instability over there with their government, but that seemed to have been washed away by the flood of good tech earnings coming out today. We had Micron beating the street by 15%, and NVIDIA putting up some good numbers. We had AT&T getting upgraded. It was just love across the board for the tech sector. At the same time, jobless claims unexpectedly were down, I believe, about 5,000, so that helped to boost the market as well. So it was just a surge of good news. It's almost as if we weren't looking at Chernobyl 2 over at Japan and everything else. And everything from last week, all the concerns have just been washed away, and now it's a beautiful time to be in the market again. So what were you watching today, Uncle Mike Tusaw?
I was watching a lot of things, but in particular, Apple is coming back a little bit, just going down my list here. Apple's up close to $6 on the day. The one that really caught my eye, though, more than any of them, is Ford. Have you driven a Ford lately? And a lot of people are saying that there's going to be parts shortages for a lot of the Japanese car makers, and Ford's up actually over 5% today. So that was pretty exciting to watch. Gold and silver yesterday, they had a big day in silver yesterday, a little bit of a pullback today, but for the most part, the exciting thing of the day over in the Know Your Options world is Ford.
Yeah, we were playing around with Ford a lot going into March expiration. We actually had a lot of positions down on the 14 handle strike, and that was one I agree with you. I was actually kind of hoping that I would get assigned on some of those because I don't mind picking up Ford below the 14 handle. We haven't reinitiated our position yet. So we're looking at Ford to where to get back in. But, yeah, we like Ford down in these levels as well.
Yeah. Yeah, this is one where we have a combination of stuff going on. We have long stock, covered calls, short puts. We got all sorts of Ford for different people for different stuff.
Ford's almost one where you're kind of leery to hit the covered calls. The upside isn't that juicy, and there is always the potential with Ford we've seen lately to some serious gaps to the upside.
Oh, we're at 17, so
okay, so you're good for a while.
Yeah, I'm more than happy to cash out at a 10% gain on it.
Are those more long-term calls you have then? Or
2 months. We just went out to May today just to get a little bit of premium going on it because we originally got put in at 17 for this group of people. So today it's up around, it came up a little bit. So we put on the 17 calls for May. Just, if it goes up there, great. We've had enough premium on it to where if it at 17, we probably would get out of it. So we did the 17s.
A lot of other interesting things going on today, and NVIDIA has been on a tear. This is the one, if you remember, we talked about them a few months ago. This is the one that rallied, probably almost doubled after they had a good performance at the Consumer Electronics Show back in January, and since have come off sharply. They got into the mid-20s, and then they've since sold off quite a bit, and their earnings were fairly decent yesterday, so they're back up on a rally, up about 8% today to 1923. But this is the name that's just been all over the board, so if you're looking at some good tech volatility names, this is definitely one to keep an eye on. And Mr. Sebastian, what were you watching in today's yo-yo markets?
Well, just the absolute drubbing of April volatility. I started noticing this yesterday, but they, up until probably Monday or Tuesday, people were still afraid to sell April. That fear is there no longer. They are just unloading April premium. They did all day. We saw April just get absolutely crushed. The spread between VIX and VXV, which is the long-term VIX, is just it widened by close to a point. We saw downside curve, what we call the smile curve, get absolutely throttled. Yesterday we may have seen bigger moves in the VIX, but I think this is the most telling, just absolute drudgery of any kind of fear that we've seen kind of since we popped to 30. Today was actually, from where I'm standing, a much more just everybody sell everything kind of day than even we saw coming off that 30 bounce. I'm also keeping an eye on RIM and Oracle after the bell. RIM has earnings kind of being announced now.
Yeah, I saw you put out something on Twitter about RIM today, didn't you?
Yeah, I was. My good friend Adam Warner was posting that he did a March weekly versus an April weekly calendar. So he sold the March, bought the April. And I looked at it and I said, from a risk-reward standpoint, this is a great trade. And so, I told him, hey, I'm piling on. And so I popped into a really, really small RIM weekly 65 call spread. So I'm short the March weekly that expires tomorrow, which also happens to be my wife's birthday. Happy birthday, honey. And the April weekly that expires next Friday. So that's what I'm looking at. And then finally, this skew, I've been playing with, it's something I'm working on, Mark, is I'm playing with a way of using the VIX index and the skew index kind of in tandem. I've been kind of playing with whether, popping those two together and then adding in VXV can give you a kind of a 3-quote snapshot of what the volatility surface looks like.
So you have been watching that skew index lately?
Yeah, my only issue with the skewed index is they only update it once a day.
It's kind of hard for an intraday perspective to use that, yeah.
Yeah, so it's interesting, it's interesting to look at kind of on a snapshot basis because I'm looking at the combo of skew and vol, and the put curve is at the cheapest level since early February, maybe late January, since probably before this whole thing blew up. So it's really fascinating.
Yeah, that's one of those things that the CBOE kind of threw out there, and we initially went back and forth on, or whether, just like the individual name VIXs, what the utility of those is. You can already get that from the implied in the options. But on the flip side, it is nice to have something out there that encapsulates all of that in one simple little index. You can just pull it up instead of saying, let me go pull up the downside in SPX and play with it myself. You can just look at that number. Obviously, it is just a once-a-day abstract, so they need to do some work to make that a little more usable. But I wouldn't be surprised, given how fast they cranked out the application to file for tradable products and the individual name VIXs, I wouldn't be surprised if we see something on this in the tradable aspect relatively soon. And then Uncle Mike and Mr. T-Knob, what were you guys seeing out in the crazy, super exciting world of commodities today?
I'll be happy to start. Oil actually didn't go up today. So lately it seems like it's kind of a pullback. I'd say, in the oil world, we're about flat right now. We did hit the upper 106, I think 106.69 I'm seeing on the May NYMEX contract. So we came up a little bit with oil, and what's going to be interesting to see with oil is if this can continue. I remember the day of rage a couple weeks ago. there was a lot of fear going on that a lot of people thought that oil was going to shoot up after that, and nothing really happened. But it's held its own. It hasn't moved that much, and I'm watching oil. I think it'll be interesting to see if it does start to move a little bit more.
You got to wonder how many people got burned picking up some insane upside, like 170, 180 calls, and ahead of that day of rage last week.
Yeah, you'd think, because I remember there was a lot of open interest at the 200 calls. I forget which month it was.
Yeah, it was exploding up to that upside. So we saw a lot of premium just vanish overnight after that thing failed to materialize. It
did, and I would have figured that oil would have pulled back a little bit more by now. But it hasn't, so it stayed flat today. So I think it's going to be interesting to watch in these next couple of weeks to see where it goes. Gold and silver both had some pretty big days yesterday. Today they were relatively flat on the day. I have SLV was up 10 cents I'm seeing right here. It actually did get over the 37 mark for a brief period, but it was actually down a little bit on the day. But with that, they both had some pretty big days yesterday, so it's going to be interesting to see these next few weeks with everything going on in the world where the commodities do go. That is for sure.
Yeah. A couple things that we're watching here. We're watching the currencies. We're, looking at this dollar, and we're just, kind of waiting to see where it's going to go, what it's going to do, and, when is it going to do it? Can it hold here? Is it just going to fall apart again? So
oh my gosh, you just listed off 3 straight 80s songs in a row. It was incredible.
Folks, if you can name the titles of those songs, Mark Sebastian will give you one free mentoring session.
That would be incredible. That was just unbelievable, Tim. You're like an 80s machine. Keep talking.
Thank you. All right. So yeah, it's, the dollar we're looking at some of these grain markets, and some of the other markets that we had was, crude oil is something we're trying to pay attention to, keep our eye on, and natural gas here. Natural gas had a little bit of a pullback, so, if you're bullish on the natural gas, it might not be a bad place to step in. It seems that most of the news that, I'm reading, I'm getting, and talking to customers that natural gas, and like we talked on the last show, it really is something now that's sort of being seriously considered. So those are some of the commodity markets we're paying attention to.
Breaking news on the trading blog here. The RIM earnings appear to be out, and the market does not appear to like them. The stock closed at $64, and it's already down at 58 in the after hours. We're down 6 points, almost 10% now. Obviously, the initial vacillations are hard to read into. You have to wait for it to settle down a little bit. But
give it a minute.
Who knows? The next minute it might be up 10%. But overall, the trend appears to be negative on the RIM announcement.
It looks like they were playing pigeon as they ran up the stock today. Kind of interesting, right?
Are you saying they moved it up ahead of earnings and did some manipulation? What are you saying, sir?
The old pump and dump.
I refuse to believe these words I hear.
No, I know. It sounds ridiculous that would happen. But I always wonder who is buying stocks into an earnings announcement. I'm not saying –
a lot of people.
I've never understood that concept.
I think, retail who don't know that options are a better way to play it, they use the underlying. I think a lot of asset managers fall into that camp again these days, that they don't understand or are contractually prohibited from using derivatives, so they'll pick up the underlying. There's a lot of people who a good chunk of it is ignorance that there are better ways to do it. Other ways are people who are just, that's their preferred way. And of course, there's the people piling on because they see news and they want to dive in.
Yeah, but you're literally an asset manager, and you're sitting here saying, well, RIM has earnings coming up in a couple hours. I'm going to pay $2 extra on the day against this. Really? It's up 3%.
I didn't say they were good asset managers.
Yeah. Mark, wasn't that your old nickname in college, the asset manager?
You cross off the E and the T on that one, and that was my nickname. But no, that's the old saw about a lot of these fund managers these days, is that their real value added is that they can talk people into giving them their money for 2% a year. The 20% is just gravy And so that's their real value add is they're salesmen. And if they're doing stuff like this, and then you can kind of see where that argument comes to play. And with that slam to asset managers, we slam somebody every week. We do analysts, asset managers, who will be next, who knows. But we'll let the love flow freely. And with that, we will close out the old trading block and roll right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the section of the show where I sit back and let Tim Navabi run the whole show. Oh, wait, that's the next one.
No, that's
So I'm very, very confused. You got a little nervous for a second there, didn't you?
No, I did. I'm ready.
This is, of course, a section where I take the ball and run with it, and we talk about some interesting and or unusual options activity that's lighting up our tapes today. And we're going to start things off with Sand Ridge Energy, ticker symbol SD. They close at $11.70, up 22 cents on the day. This is a name that does usually around 21,000 contracts a day. Today they did over 70,000, 73,000 actually. So a high volume day for Sand Ridge Energy. They are an independent explorer and producer of crude oil and natural gas. So one of Tucsaw's favorite companies, I assume. They hit a new 52-week high today of nearly $12 before selling off a little bit. And this one's rallied quite a bit. It's up about 61% since the beginning of the year. So a good run if you're a Sand Ridge Energy holder. And looks like people are coming in today to protect some of those gains. We saw some very sizable defensive strategies going up in Sand Ridge today. We saw the SEP 911 put spread going up 20,000 times for 74 cents. At the same time, we saw 10,000 of the SEP 14 calls being sold for 94 cents. So this is essentially a very sizable collar that someone put on, undoubtedly to protect a large underlying position and the gains he's made in that. This guy's doing some sizable activity. This is 50,000 contracts of today's activity was this one trade. And this is obviously a guy who's looking to protect against a serious downside move out through September. And there's a couple of reasons. Obviously, we think this is the underlying. Obviously, it's structured to be a collar. And B, it's rolling out to September, so that's something you typically would do to defend as opposed to spec on something like this. And so, yeah, it is an interesting trade. And just in terms of size, it is an interesting one to keep an eye on. And obviously, someone worried that Sand Ridge may give up some of those gains in the next few months. Tusaw, I know you're active in a lot of the energy stuff. You watch this one at all?
Don't watch this one per se. Typically, we're more on the larger cap side on the energy part of it, and this is a little bit smaller than what we feel comfortable with. But I do like this trade a lot in that this is a trade. I do this exact trade very frequently on stocks that have gains. I like it because of the fact that you're locking in at least some semblance of profit, so to speak, to where let's say that the stock does pull back to $9. You have protection from 11 down to 9, and when that happens, you then have the ability to close the spread. You have the ability to perhaps buy more shares if you're bullish. There's a lot of things with which you can do with this, and I like the trade itself, or the strategy itself, I like a lot, especially in this sector because I'm doing it a lot in this sector these days.
Yeah, when I saw this name and I saw the trade, I instantly thought of you just because I know your penchant for collars and defensive verticals, and this seems to combine the best of both worlds. And you're right, it is an interesting way to construct it. He saved himself some premium by making it a spread as opposed to the naked downside puts, and he also wrote the calls against it to reduce his outlay even further. So it is a good way to lock in. And it's just a different way to put on a collar. That's why we like to show activity like this.
Yeah, you have more immediate protection instead of like there's no protection from 9 to 0, so you have to be active and you have to be pretty nimble in watching this, but you have more immediate protection. And that's one of the things that sometimes it makes more sense to go this route, and sometimes it makes more sense to go the traditional collar route.
Yeah, obviously this guy's not expecting it to gap to 6 anytime soon.
Yeah, and if he's doing 20,000 of these, he's probably got, even if he thinks the stock's going up, he'd be silly not to protect himself, right? I mean, yeah. That's a sizable position. That's a lot of money. That's like Longo money. That's how much money that is.
That's approaching Longo money, I'll give you that.
Yeah.
But yeah, this is what we would call probably one of the better asset managers. This is not one of the guys I would think who would come in and be picking up RIM today before earnings.
So not only, if I was his client, whoever this guy was, I'd be like, so let me get this straight. not only were you holding RIM, but you bought RIM after it rallied $2 right before it announced earnings. Yeah. Okay, I gotcha. You're fired. That would be mine. That would never happen at Charles Schwab.
Or know your options for that matter.
There you go.
Or know your options for that matter.
And then moving on to a very different name, CBS. They closed at $25.09, up 22 cents. And this is the name that does about 4,000 contracts a day. They did over 31,000 today. The bulk of that actually was bearish activity. We saw a lot of people piling into April puts. We saw about more than 8,000 of the April 24 puts going up early on the day, and this is on a strike that just had an open interest of a little over 200 contracts. This is all opening paper. The bulk of them getting picked up for about 55 cents each.
There's one guy in CBS that does this, and he's along. This guy's hedging a stock position. I'm 100% certain of it. Because every time he goes in and does this, the stock rallies. So
I like Mr. Navabi's insight into this, that it is indeed the Charlie Sheen protective put trade. I like that. They might be a little bit late to that party, but
the Charlie Sheen protective put play.
Did you guys hear how much cocaine Charlie Sheen actually did?
No.
Enough to kill 2.5 men.
Oh, hello.
I did see he has a live show coming to Chicago soon with all sorts of personal meet and greet packages.
I'm excited.
I thought of picking one up for Sebastian. I thought that would be kind of a nice little.
Oh my gosh! Can you imagine being Charlie Sheen in a room?
I don't even want to know where that conversation would go. But he is like a living 80s reference. You could just talk to him about Platoon all day and stuff, you know.
Oh, that's true.
Wall Street, even better.
Wall Street,
Yeah.
right.
I'd be like, what happened to Money Never Sleeps? Why did it suck so bad? That's what I would say.
And he'll say, because I wasn't in it.
And he'd be right.
And then, of course, we're going to close it out with a little biotech because we love the little biotechs. This was Biomimetic Therapeutics, BMTI. And they closed at $12.71, up a dime. This is the name that does about 400 contracts a day. So this is the size player. And today they did over 4,000. And we saw one guy picking up calls today in BMTI, looking for this thing to pick up. And this is today they picked up about 2,000 of the May 14s for $1.70. And this is after some pretty sizable bullish activity coming in last week, where we saw the June 11-15 call spread going up last Friday on a pretty sizable level as well. I don't have the exact numbers for that call spread right here, but that was a pretty sizable trade as well. So within the last few sessions, we've seen two relatively sizable, especially for this name, it is 400 contracts a day, and extremely bullish plays in this little biotech. And these things always tend to catch our eye when we have a little name like this. It does very little volume, has very little news, and all of a sudden there's an explosion of bullish interest. And this is the kind of thing where we like to keep an eye on. Maybe someone thinks that they are set to have some sort of approval or something like that in this name relatively soon. So BMTI, a lot of sizable bullish paper coming in there, and might be one to keep an eye on as we go forward. We'll add it to the names with THC and a few others that have some dubious bullish paper, and we'll see what's going out in those. And with that great laugh from Mr. Navabi, we're going to close out the old odd block and roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is the segment of the show where we let Tim Navabi loose, and he runs amok with all of his various tidbits and his pearls of wisdom and knowledge. And at the end of the segment, we pick up the pieces, and we collectively move on and just shake our heads at the wisdom that has been dumped upon us. So, Mr. Navabi, feel free to deluge us with your wisdom, sir.
Okay. Well, thank you very much, Mark. I appreciate it, and I enjoyed
Good luck
listening.
living up to that one.
Now, are you saying thanks to me for the awesome song, or thanks to Mark Longo for the build-up?
No, I was going to say thanks to Mark Longo, but I really like your song. I liked your song.
All right. Thanks, Tim.
I'm a little worried that you knew all those words and you knew everything about that Charles in Charge song. It was
Well,
Sebastian, you had that Charles in Charge lunchbox, didn't you? You were that kid.
yeah, I'm actually a little young for Charles in Charge is the funny thing. Like, he's 37 years old. That's like the Charles in Charge age.
yeah, I know.
That was a huge song.
I turned it off when I saw it. I couldn't withstand it. I thought it was ridiculous.
Oh, them spiting words to Sebastian.
All right, Mr. Navabi, we have derailed your segment long enough. By all means, sir, regale us with your wisdom.
No problem. I just wanted to comment a little bit about what Mike had said earlier, that, if you were, falling asleep today, that or I forget how you put it, if you weren't watching the markets, or in general, a lot of movement today, and it was kind of odd, and some of the activity here at Options Express, we'd get busy, and then all of a sudden we'd get very slow, and then very busy, and then very slow, and very busy. So it was a very interesting day, a lot of movement in the markets. A couple of things I wanted to go over here real quickly were, what were some of the OX most actives? Some kind of came up here that I thought hadn't been here in a while. Number one, it's the SPY. Number two, it's the RUT. 3 is the SLV. Then we have the SPX, the triple Qs. I'm really glad we went back to the triple Qs. Apple, Netflix.
Yeah, me too.
Baidu.
Me too. I agree with you. There's something that feels right about saying the triple Qs,
Mm-hmm. Mm-hmm.
Quad Q just didn't sit well with me.
Not at all.
Sorry.
I know when someone says triple Qs, I know exactly what they're saying. But when they say quad Q, it was just odd. So
increases our productivity by 25%.
Exactly.
Yeah.
Fewer keystrokes.
Nice.
Yep.
There you go. Behind the triple Qs was Apple, and then Netflix, Baidu, Gold, and Bank of America on the bottom of the list there.
You OX guys love your Baidu. They're always active in that name.
Yeah. Baidu.
What is it about shiny search that so appeals to the OX customer?
Yeah, I don't know. I think that's one of those trades. Most trades I see with Baidu are credit spreads and weeklies, and that's
what I was going to ask. Do they have a lot of premium on the downside, or something that would attract a lot of your premium riders there?
I think they do, and even if they don't, they still attract a lot of the premium sellers there.
Always a wise decision.
So that's usually a conversation that I have with the customers on the risk reward of that trade. But that kind of again is the list of the most actives. Some of the other trades that I wanted to talk about here was a trade by our commodity analyst, Rob Kay. Kind of what Rob had mentioned on his blog was something similar to what I had said about watching the dollar at this level. It's kind of at a critical level here. It could sort of, fall apart, break some of these critical levels, or it may, start to firm up. He had an idea of seeing the dollar sort of have a little bit of a bounce from this level, and then he thought, hey, if you want to, continue to kind of shun the dollar, and you're bullish on the commodities, one way to do it, would be essentially to buy a put spread in the dollar. He was recommending or suggesting the May 74.76 bear put spread. When he wrote the blog, it had a premium of about 50 cents, so that's about $500, and then the maximum profit on that is $1,500, being that every 1.0 in the dollar is $1,000. So that was the trade recommendation from Rob, our commodity analyst. Yeah. Yeah. Some of the other commodities in some of the other big commodity movers today that we had our eye on. Let me bring this up really quick here. Wheat, again, I mentioned that earlier. Wheat was up pretty big, and I've got a story on that in just a minute. Wheat, cotton, corn, sugar, oats, some of the losers here, again, were natural gas, pork bellies, cocoa. Again, like Mike said earlier, it's really interesting to see, where these commodities go, if they're going to sort of continue up, or are they going to sort of break back down? Excuse me. So, one of the articles, I saw this article on Bloomberg, and I thought it was pretty interesting. I didn't have too much time to do much reporting on it, or summarizing on it for the show, but it is on Bloomberg News. It was on the commodity markets, and it was the title that the worst drought in Texas. Hold on, where's the exact article? Worst Texas drought in 44 years, damaging wheat crop, reducing cattle herds. That was the title of that, and essentially what it's talking about here is that Texas is the number one cattle producer and the number two winter wheat producer. Just recently, as of March 20th, about more than half of the wheat fields and pastures were rated as poor or very poor. This could be an opportunity here if somebody is, again, bullish the commodities. The wheat is a nice contract to trade. It's a pretty easy contract to trade. There's not much to it. We shall see what's going on there, or how that winds up.
Is that a pretty liquid contract as compared to some of the other ones we've talked about, like cotton and some of the other ag ones that are a little bit harder, I think, for the average, Joe retail to dive into? They're either limit up or limit down all day, not much real trading going on in there.
Yeah. Wheat is a very easy contract to trade. Very easy. Lots of liquidity. It does trade, practically 24 hours a day. Actually, no, wheat's not one of those. Wheat takes a little bit more of a break, but it does trade in the overnight session with still some pretty good liquidity in volume. And I have spoken to new commodity traders who haven't traded futures before, but they have prepared themselves for what could happen in futures trading, and they'll start out trading wheat, and they like it. It is a nice contract. It's, a pretty tight bid-ask spread. It's a relatively friendly contract to trade.
Well, that's good news, I think, for a lot of our listeners who are interested in playing around with the Ags. And, I don't know, Tim, if you've been watching the news since the announcement, the bombshell announcement on Monday, but the Schwab acquisition seems to have lit up the media again with discussion of options and their appropriateness for the retail customer. I know there was a big piece either the day of or the day after the acquisition on MarketWatch where they essentially slammed the notion of Schwab getting back hardcore into options as being dangerous, and how adding options was not for the average investor, and options only add risk. I haven't listened to it personally, but I heard there was a relatively scathing piece on NPR the same night just slamming the notion of Schwab.
NPR.
Did you? Yeah, well.
Shocker that, first off, for a reporter to write a scathing piece on derivatives, you need a derivative trader to write a scathing piece on derivatives. These people do not understand how options work.
Well, that's the other old thing. That's the other group we'll slam this week, which, of course, will be reporters. There was a guy on MarketWatch, I believe Jaffe, who's been around for a while and relatively well-known and should know better. That's what kind of the surprising thing for me was. And, NPR doing a big thing about it. I guess you can take what you will, whatever your view of NPR may be. But I was just kind of surprised that we routinely bump up against this whenever there's any sort of option/derivatives headline, is that immediate negative backlash. And we obviously deal with that a lot at the Options Insider. We work with a lot of the media outlets around the country and helping to shape and inform their coverage of options. And even still, this stuff seems to creep up. And I was just surprised at the immediate backlash. And aside from all the talk about pricing and all the other stuff like that, but just the immediate backlash against Schwab getting back into options. Have you seen any of that at all, Tim, or you've been reading any of that coverage?
You know what? I have not. The news was announced. We are getting some internal communication. Nothing major, nothing very secretive at all. But I don't really. I just haven't been looking at some of that news. Maybe over the weekend I'll do a little bit more. But I just wanted to say that I do talk to new option traders, and people that are using options for some type of leverage or some type of protection. When they do their homework, I think they can be very successful, and some of them are. It's the problem that people are trading things that they don't know, or they're listening to somebody who only has one interest in mind of maybe possibly making commissions or getting assets on the book. But it's not that every new person exposed to options, is all of a sudden going to lose, or start to, lose their portfolio, and not ever understand what they're doing. But, there are some of those, and I don't think that we can really say that options should just be totally not available to any retail customers, because people who really pay attention to their portfolio and do their homework and start out slow. They don't have these big dreams in their head of hitting the lottery with options. They seem to do okay, and I don't really see anything wrong with some of the retail crowd trading options.
No, not at all. That's the point. That's a very antiquated viewpoint.
And I would argue that some of the rules and regulations that are meant to protect the individual investor actually put the individual investor even more at risk.
I agree.
And the biggest risk to retail investors is not Charles Schwab. It's regulators that don't know what they're doing.
Exactly.
And,
yeah.
That's the big issue. So don't blame Schwab, other than the fact that they got Options Express for a steal. Blame the regulators. Learn what you're regulating. So that's all I got.
And I'm looking here to see if I can pull up this transcript of the NPR thing. I can't find it in time, maybe for next show, but I have heard that it was a relatively interesting.
But I'm sure it was spoken in a soft way in which to make you think that they're not being condescending. When really, that's exactly what they're all about.
A very soft and progressive tone that they took on options.
I would say progressive is an interesting term. So
it's a nice euphemism. I can throw that out there and not really offend anyone, which is nice.
Yeah.
Because once you go down the political rabbit hole, there is no coming back. And I don't want to see Navabi get all fired up on politics again, because that was ugly last time. Couldn't stop this guy once we got rolling. All right. And with that, we're going to close out the old Express block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on our horizon for the next few sessions. And just to give one final review of earnings for RIM, looks like the stock has settled a little bit and the consensus is still down. The stock is down, looks like about 6.5 points right now to 57.5. So not good news on the RIM front.
It appears the research in motion is downward.
The motion is not positive for RIM, and Oracle pretty much unched. So the earnings on Oracle, and it looks like they must have already come out by now, is just not exciting at all.
That calendar spread was there, and it was a pretty decent looking trade. You could have bought the Abe May calendar for about 36 cents.
In Oracle?
In Oracle. That's going to be a nice winner. So that's going to be a real nice winner.
If it sits out right here, then yeah.
If it sits right here, that thing is going to be up. Yeah, it'll be up a good 30% off of that $36 investment. So you'll be a happy camper.
Not a bad deal.
Yeah, it's better than a kick in the Achilles tendon.
And looks like in terms of economic calendar, we saw the bulk of our good announcements for this week. We have GDP, some revisions, and Michigan sentiment tomorrow, which usually in the past hasn't moved the market substantially, especially in recent months. So I don't expect it's going to be a huge move on the economic data tomorrow. Any particular RIM and Oracle have already come out tonight. We already gave the updates on those. Any other earnings you guys are watching or anything else you guys are watching for Friday going into Monday?
I'll be interested to see whether vol rallies or falls into the weekend. That could be a really interesting thing to see. Watch for the end of the day. If there really are kind of aggressively selling this stuff off, if you could scoop up S&P 500 vol for around 17%, with the VIX around 17%, that could be a real decent short-term volatility buy.
I'd be really surprised if they're hammering the downside in SPX ahead of this weekend.
They've been killing it.
They have been, I know, but I mean, if they continue to do so,
it might. That's what I'm saying. It might be a good scoop tomorrow.
That would be definitely. I mean, if they continue to hit this with all the potential weekend risk we have going on right now, Japan could become Chernobyl 2 still at any moment. There's literally quite a bit of literal weekend risk this weekend. So if people were hitting that downside, then this is a decent time to scoop up your.
There might be a scoop there.
And then Tusaw, you said you've been playing around in Apple a lot still with your for your clients. You still have a lot of the verticals. Are you doing those ratio weekly to front month? What do you have going on in Apple, and what are you looking for? Continued upside here?
Yeah, with Apple right now, we were doing some ratio calendars, a little bit out of the money on it, but the reason we were doing it is because the vol in the weekly was so much higher than the vol in the monthlies, and so it made sense to do it. I actually was looking at that today in some pretty good detail, and it's just not there right now. So in the meantime, we're long puts and the Apple that we own, we're just going to let it ride for a little bit longer. And so so we're actually, I guess technically that makes us long volatility in Apple right now, but we're long from a protectionist standpoint of the underlying. So I'm fine with that for now, but pretty soon I'm going to have to start selling some premium on it because puts are not cheap if you just buy married puts month in, month out.
Yeah, that's an expensive way to go if you keep rolling those in Apple.
Yeah, agreed. If Apple will cooperate and continue to go up $6 a day, I'm fine with that, but from the being prudent, you're not able to expect that every day. So we'll be selling some premium on Apple pretty soon.
I'll call Steve and see what I can do for you.
See if you can hook me up. Give me a little bit bigger bump, and then it'll be a real nice looking collar.
All right, and Mr. T-Knob, anything that you guys, your customers are particularly interested in these days, or anything you want to mention before we close out the segment?
Well, I kind of think, I agree with you about, what's going to happen this weekend, if anything. And, the things that would be moving, I think, on Monday would be crude oil, gold, silver, and the grains. So, that's still what we're going to keep our eye on.
Blame it on the grains. It was, I don't know. The best I could do.
And with that Milli Vanilli reference, we will close out the old Around the Block segment. And that's also going to do it for this episode of the Option Block. I want to thank the regular cast of characters for coming on again today and being their old silly selves. Starting off with Uncle Mike Tusaw, what is going on? Where are you voyaging to this week and next week, sir, Uncle Mike, to regale the masses with your wisdom?
I'm going to say something that I've always wanted to say publicly my entire life as a kid. I'm going to Disney World. But, Grant, I was always hoping that I'd say it like after winning a Super Bowl, but it didn't quite work out that way. But this weekend, Options Express is having an event at the Dolphin Hotel in Orlando, Florida. I will be guest speaking at that event.
Very swanky, sir. Very high end. I didn't know you flew in such elite circles.
Just rolling with Options Express. I guess maybe with it's part of Charles Schwab now, so maybe that has something to do with it. Who knows?
Yeah, they have the deep pockets now.
There you go. But yeah, I'll be out there at that event, so stop on by the event. It's going to be a lot of fun. There'll be an Options Express site demo that day. There'll be some other speakers there as well. Tim from Investors Business Daily will be there. and it's going to be a lot of fun. So stop on by. We'd love to see you there.
And while we're on the OX/Schwab tip, Mr. Navabi, what is coming up in the lands of OX Schwab these days?
In the OX Schwab, we've got some webinars on March 27th, calendars and diagonals. That's at 9:30 Eastern. On the 28th, we've got It's All Greek to Me. And then on the 29th, we've got Generate Some Income with Covered Calls. So those are 3 webinars that we have coming up.
I love the title. Generate some income. Not a lot, but just generate some income. You know?
Mm-hmm.
Kind of funny.
Mm-hmm.
There's a nickel in your pocket for a rainy day.
Hey, here's some income for you. Don't spend it all in one place.
Yeah, and then, of course, Mr. Sebastian, Mr. Greasy Meatball himself, what is going on in the world of playing with Slinkies in your office?
I am going to be all over the place in the next month. Between now and the end of April, I'm making 8 webinars, I believe. 8 webinars and live appearances. I've got one on the 29th for Expiring Monthly. I've got a second one for the Rebels group in Houston. So if you have interest in that, it's going to be online and live. You can email me, Market@OptionPit, about that. I've got several coming up in April, the 12th, the 13th, the 20th, the 27th, and the 28th. So I'm going to be everywhere. We are doing a lot of things all over the place at Option Pit. Just check out the blog to keep up with what we're doing. That's just optionpit.com/blog. And remember, if you want to try our Level 1 service, which is you get to listen to me every day. If you like the Pit Report, you get to listen to me yammer on for a good 45 minutes every day. And I'll let you do that for $30. All you have to do is use the code OI11, and then we'll know that you are a Option Block podcast listener.
I would pay at least 10 times that amount to listen to you yammer on every day for 45 minutes to an hour. I personally cannannot get enough of that Slinky or that tinny voice.
Now, is the Slinky on the Pit Report too? The listeners need to know.
Absolutely. I'll go. Let me tell you what's happening with SPX SKU today.
And how can you go wrong?
It's going down. At the money fall is down, SKU's down.
And
that's more expensive. So.
And that's how you can tell how big Mark's personal position is in the trades he's talking about by how fast the Slinky's going.
Exactly.
Yes. The Slinky Index.
Don't bring the Slinky to the poker table. That is your tell, sir.
Exactly. Don't bring a Slinky to a gunfight.
Good advice in all circumstances, I would say. And, of course, if you want to hear any more of the unusual activity, there's a lot we didn't have time to get to on the show today, or any of the breaking options news, or any of the other topics we discussed on the show today, as well as quite a few other things. Then surf on over to theoptionsinsider.com and click around, post in our forum. You can leave questions and comments for not just this show, but a variety of other shows we have on the Options Insider Radio Network there. You can leave voicemails for all of those shows as well at 312-544-9356. Make it interesting, make it exciting, and we will read it on the air. You can also hit us up via Twitter, twitter.com/options. And Uncle Mike, what was your Twitter handle again?
No Options. KNOW Options.
And Sebastian, you are Option Pit, I believe, correct?
Yes, I am.
There you go. And Mr. Navabi is just T-Nav, so you can reach him via Twitter that way.
Navabit, it actually is.
Navabit?
Oh, yeah, Navabit is my Twitter name.
My precious Navabi.
All right, and that's going to do it for this episode of The Option Block. I want to thank all of our listeners for downloading and streaming and subscribing to the show and making it such a success. And I hope you have a good weekend and none of that weekend risk comes back to bite you. And we'll see you again next week right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The Option Block is sponsored by Options Express. When a broker emerges to lead an industry like Options Express, it's only natural to want to join them. Options Express has excelled with powerful technology, an innovative platform, and exceptional customer service. Others wonder what they'll do next. Stocks, options, and futures all in one account. Visit optionsexpress.com/OXradio for your free account. Options and futures involve risk and are not suitable for all investors. Please read the characteristics and risk of standardized options and the risk disclosure statement for futures and options, both available by calling 1-888-280-8020 or visiting www.optionsexpress.com and clicking on the Risks and Policies link. Options Express Inc. makes no investment recommendations and does not provide financial, tax, or legal advice. The views and opinions expressed on the Option Block are not those of Options Express or the Options Insider Incorporated and are strictly provided for educational and informational purposes only. Any mention of specific stock options, futures, or other investment products is not intended to portray a recommendation to buy or sell a particular security. Options Express Incorporated is a member of FINRA, SIPC, and NFA. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.
Charles in charge of my Express block. Dun, 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 dun. Charles in charge of Tim Navabi's wrongs and his rights. I want Charles and Schwab with me.